This is Radio Now 95.3 FM. Come for the news, stay for informed conversations.
Moving along now, we've seen inflation ease for quite a while now. How significant is this trend for households and businesses? Because when people hear inflation is reduced, the first thing they say is, but things are still expensive. So what does this mean for households and businesses?
Well, a reduction in inflation is not the same thing as a drop in prices in the market. And I think it's important people understand that. Inflation measures the rate at which prices increase. So what the inflation figures are telling us is simply that the rate at which prices increase is slowing down. And you and I recall that there was a time in 2024, early 2024, late 2023, where, you probably wanted to buy whatever you wanted to buy as soon as you were told the price. Because you could go away and come back later that day and you suddenly get a different price. That actually happened, and it was a scary time from an economic perspective. But today, it takes a while longer for prices to rise, if at all, maybe a month, maybe two. And the variation in price levels for different commodities in different parts of Nigeria is pretty wide. So yes, a drop in inflation is not getting to the street yet. It's not saying that if anyone expected prices to fall, it doesn't mean prices are falling. It simply means they're not rising at the speed at which they were rising earlier. And let's bear in mind, too, that for an inflation rate of over 20%, you can expect that in about 5 to 6.5 years, prices would actually double.
Oh, that's interesting. So let me just see if I can break it down. Incidentally, for our listener, Mr. Adebajo is also my professor. He taught me in the business school. So it's interesting. So, Professor, let's see if you've done your work well. I'd like to believe you have. So basically, if something costs 10 naira today and inflation is at 10%, it means if we're going to measure it on a day-by-day basis, it means tomorrow it will cost me 11 naira. And the day after that, it will cost me 10% of 11 naira, which is 1 naira, 10 kobo, and so on and so on. Is it? How does that work?
Yeah. No, not really, because inflation is tended to be looked at not as if prices will rise on a daily basis.
Yes.
And that's why I said, at a 20% annual inflation rate, okay, because it tends to be measured. You've got year-on-year inflation typically. And so if it takes a year for that 1 naira to be an increase on your original 10 naira, that's your 10% year on year, you can be sure that because inflation compounds, if 11 naira then rises by another 10%, it will rise by 1 naira 10 kobo. So by the second year, it's about 12.1 naira. And that's why, it would even take less than 10 years for that price to double.
Interesting.
Yeah.
Okay, so let's come back to the monetary policy rate now. If the central bank does cut its rate this week, how might that affect borrowing costs, investments, and jobs in the short term?
First of all, let me just say it will take a little while to trickle down to jobs. So let's not dwell too much on its employment impact, because there is a process for that. But essentially, the first thing that would happen is banks are going to reach out to as many of their customers and talk about the drop in lending rates. And if you are talking to entrepreneurs, to corporates in the business circle, a lot of them would like to borrow some more to fund certain commercial or economic activities at this point in time. And the guess is as good as mine. They're going to be looking in terms of what is the cost of borrowing and what do they need to do, and whether they can get those returns. money sometime, say March next year, I will be looking at making sure that the kind of prices I get are prices that can not only repay the loan and the interest, but also make a reasonable margin to me. So yes, there will be borrowing, and that is expected to be a good thing for the economy. If we can get the manufacturing sector up and going again, it will be fantastic.
Okay, and on the flip side, if they do decide to hold steady at the current rates, what are the advantages or disadvantages of that decision?
Well, for me, I probably expect that the central bank will hold steady at the current rate of 27.5. We've been living with this rate for the past 14 months or so. It's done well at that rate. It's stabilized quite a lot of things, indices in the economy, and it reduced some. It's not going to tame prices yet, because our price increases tend to be driven essentially, when you look at inflation, the core inflation part, where you've got energy and you've got food prices. And the things that affect energy and food prices may be outside the control of the lending rate itself. So it's also a bit tricky at this stage to loosen up the monetary policy and allow lots of companies to borrow, because if there's so much naira out there and the dollar appears to be at a reasonable rate, you may find a situation where so many people, traders in particular also, are borrowing naira simply to buy dollars. In the game of demand and supply, that means there'll be much more naira chasing after dollars, and that's going to affect the exchange rate of the naira to the dollar.
Interesting. Right, very quickly, in about 30 seconds, if you will, the words about in uninformed quarters is that the economy has been stabilized. I'm not saying it is stabilizing. The word is it's stabilized. What's your opinion on that matter?
Well, I think to a fair degree, it's a lot more predictable. Changes are not so sudden. No economy is stagnant. All the indices aren't just going to stay there and be at that level for years. So when people talk about stability, and yes, indeed, Camry, last year, at discussions I had, the expectation, the want, we all had was, let's have a more stable economy, something where you can look at certain factors, you can look at fundamentals, and you can more or less predict with plus or minus 4 or 5 in terms of an error. So yes, the sense is that it's much more stable, holding steady, moving up a bit, down a bit, nothing volatile, and that's key. Nothing volatile right now, no spikes at all. And that's also the reason why I expect that the rates will be held. Because if it's lowered, you may suddenly find a situation where there's a spike in another index that's measured for the economy.
Interesting. So our focus now should be, now the ship is stable, we can focus on charting the right and proper course. Growth should be on the front burner. Now we have stability. Thank you so much for your time this morning. Adeboyega Adebajo, he's an economist, and he's shared his thoughts with us on the monetary policy rate conversations going on.
This is Radio Now 95.3 FM. Come for the news, stay for informed conversations.